Ladies and gentlemen, I would like to warn everybody that the market has sniffed out a potential AI risk and potentially even an AI mega scam that is driving up the entire stock market high. I think it's important for us to go in with our eyes open. So let's just watch on what this potential risk is at this mammoth scale. So there is an AI mega risk in the stock market right now, and I even call it potentially scammy. And surprisingly, it was the AI police that caught the AI crook. So, what do I mean by that? Let's just watch on, shall we? Well, a few days ago, Nvidia announced a blowout, fantastic report, and the stock market skyrocketed. But within a few hours, it crashed, okay, and crashed and crashed and crashed and crashed. And yesterday, and potentially even today, it started to recover somewhat. What causes few hours bull run and then a crash? There could be something there that everybody should take note of in with big open eyes. So, what triggered this whole discussion and debate is the November 19 NVIDIA announcement results. The profit really exceeded all expectation, and NVIDIA stock skyrocketed and drove all the high tech stocks up. And the S&P 500 went up, the Nasdaq went up, even Bitcoin went up. And the general consensus, including myself, is that the AI demand is unstoppable. The bull run is set to return and things like that. So that was great, and that's what the top line results is. Well, shortly after that, some hours later, the mood suddenly flipped. Well, that's because now the a lot of the analysts uses AI to forensically look at the announcement of results and look at the numbers whatsoever. Usually, it will take research analysts many days to identify some of this risk and sometimes even weeks. But right now with AI, they forensically identified many of these risks within minutes and hours, and as a result, the stock market start beating down. Well, let's take a look at what all these potential risks are. So the red flag number one is that the inventory of Nvidia has jumped 32% quarter on quarter. That means the stock in the warehouse has jumped 32%. But wait, didn't we hear the Nvidia CEO, Jensen Huang, say that the demand is beyond anybody's imagination? And the CFO also said there's a severe supply shortages and things like that. So that doesn't make sense. If I have a lot of shortages, why are there so many stocks sitting in the warehouse? So let's explain this in a simple restaurant setting. Okay, imagine a restaurant come to you and just said that we're fully booked. We got people queuing up restaurants that that we can't serve and things like that. But however, you got empty tables in the restaurant. You got food piling up in the kitchen that is not being served. Something doesn't match. Okay, so this is a case of overproduction, and this could smell case of a weakening demand, and also potentially some artificial orders or even some number smoke that are being thrown out, and we don't know what it is. But fortunately, the AI police, well, I mean, they use AI to forensically dig through the books, and all this problem came out within minutes or hours. So apart from the high inventory, right now we have got a strange surprise that the gross margin, that means the profit of the products, fell despite selling more premium products. Well, the new GB200 chips, I don't know what is it, but some more sophisticated chip is now priced at 70,000 each, highest margin ever. And the manufacturing cost is quite low, but yet the overall margin has actually fallen from 74 to 73%. So we don't know what is in this whole thing. There could be hidden discount or some distorted pricing structure. We don't know. That's a weird thing. So the red flag number three comes out after the results were announced, and the machine went to dig out these results, and they realized that the cash flow quality of Nvidia is far below their peers. For example, right, their cash flow quality now sits at 75%, far below industry standard. Now, cash flow quality means that you look at the free cash flow over maybe turnovers and things like that. And you have other competitor, no, other industry players such as TSMC is close to 100, and so on. But theirs is at 75%, which basically means that right now they are pulling out a lot of cash for something else. What is that something else? Well, the current thinking right now is that they are pushing a lot of money into unusual corporate structuring and business structuring so that it would help to pump up the share price. So this is where we come to the circular financing structure. Now there are people actually talk about it before. I saw it, I didn't think of it as too much, but now I realize that it actually hurt numbers right now. So Nvidia actually provide equity. That means they invest in companies that are set up called purpose vehicles, SPVs. Okay, for example, XAI special purpose vehicles. These companies then use this money to buy Nvidia chip. Okay, and this Nvidia revenue is then recognized in their financial books. Okay, but the truth is, I fund. Imagine this: I run a company. I fund my son's company to buy my product. So as a result, my revenue goes up. But left and right is still my money, right? So it's a self-funded growth, and we don't know how big this scale is in actual detail, but it is large. Well, this pattern in the whole AI boom is not unique to NVIDIA. So OpenAI, which is ChatGPT, and Microsoft have a similar structure. Microsoft invests in billions into OpenAI, then OpenAI then buy back Microsoft cloud solutions, and OpenAI and Oracle have a very similar dependency on each other as well, and so on. And we now have a lot of all these going on. So we don't know whether this is just organic, that means it's necessary, or this is just artificial creation of demand, and that smells quite dangerous. Well, the funny thing is that all this AI hanky-panky smoke they are thrown around, very difficult to detect. Well, sad to say, or for these guys, it takes an AI police to catch an AI crook. So you throw all these financial statements into a good AI machines, write the right prompt, and everything comes out within minutes or so, or even in the latest hours. So these kind of patterns are very difficult for human to go and detect. People who are trained in accounting and finance, we can detect this, but it takes time to read through the whole damn financial report. They are so thick with a fine tooth. But nowadays with AI, all this just in the press of a few buttons, and the machine can detect it. So AI potential scams or potential problems now require AI police to catch it. So AI police work as fast as the crook itself. So I think right now all this abnormally, okay, I don't know whether this qualifies as scam, but these are called abnormally. AI abnormally arrangements are kind of dangerous, and the police are flagging it out right now. Well, to be frank, there are a lot of bright investors are now taking a escape position. So Peter Thiel, a very famous guy in Silicon Valley, has divested $100 million in AI position. SoftBank offload his entire position in Nvidia. Michael Burry from the Big Short, the movie, has put a big sizable put option. That means prepared to sell, an option to sell on a AI downside. Now, I don't know whether that's the right strategy, but I do know that this kind of arrangement is very dangerous. Now, does it mean that whole AI is like .com, like the tulip mania is all a scam and all a BS and bubble? No, I don't think so. Absolutely not. This AI, we're now using it, to drive money-making businesses. So this AI productivity gains are absolutely measurable, and the enterprise AI adoption is accelerating. And I think huge transformation from a small business to a large corporate enterprise to governmental to country level is happening in a big mega way. But all this corporate structuring, all this unusual smoke that are thrown around kind of smell that, maybe there's something a bit dangerous going on. So we see this happen before in the dot-com days, in cloud, in mobile, EVs, whatsoever. All these are quite dangerous, I would say. Yeah, absolutely dangerous. And I don't know if there's going to be a bubble burst. I don't know whether this will smell something, but already Wall Street sensed that something is wrong and sold it down. Now it's kind of coming back. Will it continue to go up, go down? It's really hard to say. My view is that long term, AI is going to be like .com. It's going to go up and up and up. I'm very sure. But from the medium and short term, it could be a few months, a few years, the kind of, or even a few weeks or few days, the volatility could be very high. I can't tell with precision whether this whole thing could smell, a potential red flag of catastrophic event that could happen, like a dot-com bust. But I do think that we should go in with our eyes open. My view for myself is this: form a financial safety net, CPF. Nothing can go wrong with that. Okay. And it's possible to have millions or even multi-million dollar CPF portfolio. I've demonstrated how that can be done really. So, and of course, accumulate some dry powder. If it does crash, buy. Okay. And when you get overheated up as the bull run goes up, I've demonstrated 3 rounds of rebalancing already. It's still going up. I rebalance. If it go up somehow, I'll rebalance again. But I generally stay invested, right? Stay invested, okay. But I do some rebalancing to a negatively or uncorrelated asset. Does this tell everybody I'm flipping my opinion? Well, I can't say no because I was extremely bullish by looking at the first set of results. Now that this set of abnormally has come out, I would just say, be careful. My view still remain consistent that in the long run, I think it'll be a strong uptick. But in the short to mid-term, I smell some danger. But it's hard to predict, if there will be a crash. But I do know that, if I hold some of these positions for a long period of time, 5, 10, 20 years, it will go up in a phenomenal way. But some of you may not be able to take it, and I wouldn't be able to advise you what to do. But I will take a more cautious position and not to be gung ho. So, how should I advise everybody? Well, don't chase stock blindly, okay? And don't panic. Corrections are part and parcel of the market. In fact, if the market do correct, I'm actually happier so that there will be a chance for us to grab things on the cheap. I like globally diversified portfolio. Even if the stock were to crash, well, about maybe 30-40% of it is based on all these high-tech stock, okay? But fortunately, the rest of it shouldn't be that impacted. And I always keep CPF as a shock absorber. So in closing message, okay, I'll just say this: AI created the bubble. The AI also exposed the bubble, and I think it's important for us to harness AI. AI is really powerful, right? Really powerful, and I think it'll be a huge mistake if we don't harness it. But stay diversified, stay safe. So my key takeaway is this: the AI boom will continue. Okay, in the medium to long run, but the risks are very high now. Just be careful. And riding on a wild and angry bull is dangerous. So proceed with a lot of caution. And I will still continue to stay in the market, but I'll be actively doing healthy rebalancing as I've always done. Thank you. Let me hear your view, and I'll see you. Bye bye.